Hello, everybody. Today is the 30th of July, 2010. Welcome to today's Silver Log, where we'll talk about volatility in the silver market. And I will be doing another episode either Saturday or Sunday, where I will talk more with the technicals on the market for both gold, silver, and the gold to silver ratio. But for now, I'd like to point out that a significant trend line, I'll get a bigger colored line, is the ones that connect these little highs, which it came up to this level today. And the moving averages, this level, orange one here, is the 20-day, which was resistance here, resistance along here, and it has gotten above it here. So now we're going to see how well that area can hold as a level of support for the big area is going to entangle the congested area of these moving and running averages, mainly the 50-day moving average that is in there. So that will be very important, and we'll go over more on the silver and gold technicals this weekend. But for now, let's talk about volatility. It was up 2% today with this nice little move here, but we see a lot of big moves. Big move to the downside here, big move, big down move here. Heck, this is the biggest one in here. A lot of big moves, and in fact, it has a pattern in here that I have named the Bart-Simpson's pattern. That is, when you have a big run-up, you consolidate through time like this and you give it all back. You're making the head with the hair of Bart Simpson. It's a little name that I thought might have a little bit of meaning to it, but a lot of big moves. I think the biggest one on this intermediate term chart is this one here. Seeing go from 1830-ish or so down to about 1730. That's a dollar move on 1830. That's about 6%. Yeah, 6% may be a big move, but historically, silver has had greater moves than that before. And this interesting chart shows the volatility in which markets go through. Each one of these ticks represents 1/4, and that is the average movement that silver moves on a day-to-day basis. Right now, in the third quarter of 2010, and it's only a month in, it is barely over 1%. Thus, it is mainly in a downtrend when we connect these peaks. And I know what you're looking at. You're looking at 1980. Over 7% on average for this time frame. And it got up to 3% average in the 70s, late 70s, in 1979. We'll take a look at those time frames in just a little bit. But this was the most volatile we have seen silver. This peak in here was the 2008, the third quarter of 2008, or the fourth quarter of 2008, sorry, when the markets were going through major turmoil. So to think that we've seen the volatility in silver, it has yet to come. And it can work within both upsides and downsides, but it seems as if the majority of this volume works within the up move, along with the big move down in 1980. And on the spreadsheet, we have the silver date. It has on this column what the price of silver was. You can ignore these three numbers here. And really, the silver number happens to be, I think, the second one. Yep, this is the silver percentage move. This is gold's percentage move, and this is the dollar's percentage move on that particular date. And these right-hand columns will tell me when big moves come into the market. And I'm going to scroll down. You don't see too much in 78. None, really. And 79. There's got to be some volatility now, doesn't there? There we go. On the 6th of September, silver was up 9%. And then it was up 8.87%, up 3%, up 36.59%. Then the next day it was down 15, up 6.59. It didn't make the cut because, well, it didn't have a 7% day. That's what these numbers are looking for, are 7% silver days. And, well, the volatility, or September the 21st, we have a day where it was down 15%. Then the next day it was up 14. Then down 8. Then it was up 10.8. October down 12.35. Silver's trading at $14.90 an ounce. Then when silver's at $17.97, it had a 7.5% up day, a 7.5% up day here. And then look at this in here. Starting on the 27th of December, going into 1980, up to the full month of January. What a volatile month, where you have so many of these volatile days. Again in March of 1980. 4 consecutive days where it was down 9%, then it's down 15%, down 17%, down 13%. Seeing silver go from $29.65 an ounce down to $16.60. Again, you had 4 straight days, seeing silver go from $23.05 down to $14 per ounce. A lot of manipulation, I believe, and I'm going to be going over more on what happened in 1979 and 80, and even for some other time frames, very short. They've got some very good documents that I don't really need anymore. It's just time for me putting it together. So, in the month of August, I will talk more on what happened in 1980. But you can see the volatility. See how in 80 it's starting to dry up a little bit. And well, what we're going to do is take a look at the chart for how volatile, how many of these 7% days we get per year. And on this chart, 1974, there were 20 days which had a 7% loss or gain. And in reality, it was actually a 7% loss or a 7.7% gain-ish, because I used a formula to change it over so that they would work out the same. And basically what I mean by that is 10% up is not the same as 10% down. So I used a formula to make it so that they are. Therefore, if it was a 10% up day, it would actually get changed to a 9% day. Little complicated, but it's just to make it so that it is fair for both the positive and the negative days. Well, this was the biggest one from 79 to 83. There were 25 days in 1980, and there were 13 days in 1979. 38 days in which had 7% days. The volume trailed off here. In the 1987, the year the stock market crashed, it had an unusual amount of high volatility. Oddly enough, well before the market crashed in October, it was done in the spring and the summer. And we can see with 04, 06, and 08 that the volatility is starting to potentially come back. But the pattern in which I was noticing when I did this chart was one that looks something like this. You can see it's a curving round shape. And this means that I wanted to see other charts to see if I could find validity for this pattern. And validity I did find. This chart here is the chart which shows volatility in the silver market, and what each of these columns happen, each of these two colors happen to be. The blue line represents the 100-day average for the volatility, meaning over the last 100 days, what percentage moves came into play. So currently, right now, we are right in here. We are right at about 1.5%. So over the last 100 days, the average day in silver gives us about 1.5%. And the orange line is the 1,000-day moving average. So they're two moving averages, but the blue doesn't really look too much like a moving average, but it actually is. But it gives us an idea for the volatility that we're seeing. And I got more validity on this pattern when I draw this line something in the area like this. And what's happening is we're now at the lower end of the support area, which could very well indicate that we could have some much higher volatility coming in towards the market. But right now, we are still on this lower trend, but the technicals are stating that this is an area where this chart may bottom, which means that we might start to see some more 2 and 3% days. After all, if you believe, like I do, that silver has some great gains in the distant future, or the not so distant future, we'll say distant as in the next couple of years, then it's going to have to break past this significant resistance of roughly 3%. And then again, maybe we might take out this high from 1980, I don't know. But to get to the 50, 60, 100, $300 an ounce mark, because of the currency crises, because of how money is created, and the amount silver has been held back, you would expect to have some pretty significant moves. We've seen a 30+% day. Will we have one higher than that next year or this year or 2012? You very well easily may. And when you start to see those days, it's not like you're going to have regular days. Oh, 1% here, 0.5% there, 1.5%. Oh, 38%, 1%, 0.5%. No. When you start to see 38%, there's going to be a bunch of 5s and 7s and 12s and 10, a lot of big days, because that's the way volume or volatility works. It has to slow down from its peaks, and it has to accelerate from its low points. Obviously, here in 87, it just had a massive peak, which is very rare. But generally speaking, you have to have those come into play. So what we're going to do now is take a look at the same chart, but reduce the top scaling, because it seems as if this extra move here really does get in the way. So we got the idea. We know 1980 got up to over 6%. So what we'll do is we'll scale this down to 3.5%. And with this chart scaled down to a 3% max range, it makes it a little easier to see that pattern that I was talking about, where the silver is going into a sort of like a bowl-shaped formation, which the actual silver chart was showing too. In my 1-hour video, I was pointing out how the actual silver chart was looking a lot like this. As far as a straight line is concerned, we're pretty much right at that significant trend line. And I think the odds should favor that the volatility is going to arise once again within the silver market. And for the time being, I think we need to see a break of, I think, 2%. Until we get over 2% on here, 1.9-ish or so, at least get above this moving average. The benefit of the doubt is still for silver to be less volatile. It wouldn't surprise me to see that sometime in the later part of the summer, and definitely to the fall, that the percentage moves that we see in silver will start to average out again to 2-3% on average per day, with probably even a few 7, 8, 9% days to boot also. Thank you for watching this video, and I will be putting out another video on Saturday or Sunday that will talk about gold and silver, technically speaking. Take care, everyone.